This is Coach Jason Ballard, and I'm a business wingman. Over the years, I've learned a lot from working in our family construction business, serving as a senior officer in the United States Air Force, and running 12 different organizations around the world. Many people helped me get to where I am today, and it's my mission in life to serve as a personal wingman to others. That's what this podcast is all about, providing knowledge, tools, resources, and mentorship to help people soar to their highest altitude. And welcome back to the Soar Higher podcast. This is your host, Coach Jason Ballard. Glad to be with you today. Today we got a really exciting topic that I think is on the minds of a lot of people out there, especially business leaders out there today. And so that's the state of the economy. Like, where are we today? There's a lot of things going on in the political realm, a lot of things going on in the business realm, nationally and internationally, that's kind of shaping things. Are we in a recession? Are we in an inflationary period still? Where are we? Where are we going? It feels kind of like we're stuck. A lot of people are just kind of watching and waiting and seeing what's going to happen with the elections and just different things going on. It's just kind of a weird period, kind of a stagnant kind of period right now. And so today we're going to be learning different aspects of this, because there's different ways to measure different aspects of the economy, right? We can look at the stock market and see what's going on there. Been a lot of fluctuation in volatility in the stock market. We look at housing prices. We look at unemployment rates. We look at real estate. We look at all kinds of economic activity like GDP and our trading with other countries, all kinds of different factors that when you kind of add them all up, give us an idea of kind of where things are, good, bad, or not, and where we're going. Well, one of the most important ways that we measure the economy and where things are in the business sector is through real estate. Real estate is a huge indicator, especially commercial real estate. That is a really good way to kind of check the temperature of what's really going on. And so today we have the real privilege of having a real estate expert on the show, a mogul himself, just an amazing, bright young guy that's been in this space for quite some time, that's going to shed the light on all these questions that we're asking. So today we get the privilege of having Raphael Collazo on the show. He and I have some shared common ground in that he was a military brat. I have a military background where our families are both military, and not just military, United States Air Force military. So that's really, really cool. But let me tell you a little bit about Raphael, and we'll get him going here. Raphael, he is a leader. He is a broker in a Louisville firm called the Crescente Group, and they're one of the top firms in this part of the country. He is also a host of the Commercial Real Estate Academy podcast, has his own podcast where he has his own experts on the show. It's also called The Real Estate 101. He's also written books. He is an author. He is a well-known author, certainly in this area. He's written 2 books called Before You Sign That Lease, and the second book, as you can probably guess, Before You Buy That Building. So before you sign the lease and before you start building the building and buying the building, what to do, and breaks that down. It's a really, really good books, by the way. Highly recommend it. So Raphael, welcome to the show, man. Great to see you today.
Thanks, Jason. It was good seeing you the other day and catching up, and I'm glad we're able to do this again on a recorded setting. I think it'll be great.
Absolutely, man. And you're doing such an amazing job. You are certainly a top star here in this market, in and around the Louisville, Kentucky, Nashville, Indianapolis, Cincinnati kind of market region. And so I'm looking forward for you to be able to talk to us about what you feel is going on and where to go. Give some people some really good advice about the future of business, real estate, the office environment, and all of those kind of things. So just kind of kick it off, man. How did you get into commercial real estate? What drove your passion to get to where you are today? And how did all that happen?
Yeah, that's a great question. So, you kind of alluded to it a little bit earlier. My upbringing, I was in the my dad was in the Air Force. He was a pediatrician for the Air Force. We were stationed at Aviano Air Base, and ultimately, I traveled around Europe. I lived in Baumholder, which is an army base in southern Germany, and then moved to SHAPE, Supreme Headquarters Alpowers Europe, and I was there until I was 14. Then moved to Arizona, where I went to high school and college. I studied engineering in college, and then got into software development and consulting at a company that implemented software systems for government agencies. I did that for about 5 years. So I lived and worked in DC. I was in Puerto Rico for a couple of years on a big tax software project. And ultimately, after Hurricane Maria, that project got put on hold and I got moved to Louisville kind of on a temporary basis. And ultimately, it turned more permanent after, I kind of established myself in the area and they wanted to keep me around. So I stayed locally in that role until early 2019. I'd always kind of thought about doing something a little bit more entrepreneurial. I had a small catering company in college called Posticity, and so
Hmm.
from early on in my life, I always had that entrepreneurial itch. And 2017, 2018, I started reading a lot of blog articles and watching a lot of videos on Bigger Pockets, which is a big investor website for real estate. And so I started looking at different opportunities within the real estate industry, and agency seemed like a logical jump. My mom was a residential agent in Arizona for many years and has done very well for herself. But after talking to her about her experiences and getting an understanding of the clientele that you work with, I think my personality lend itself more to dealing with business owners and investors. And so that's kind of what initially led me to explore the option of jumping into commercial real estate brokerage. And the more and more I did research on it, it just kind of spoke to me a little bit more than the residential side. And ultimately, I decided to take the leap of faith and jump full time into commercial. And I did. I got my license in July of 2019 and joined the Grisanti Group immediately thereafter. And I've been operating in the space ever since. So
Wow, what a great story, man! You've just done so well. I've met you a number of years ago, kind of watched you bounce around and do some great work. And you certainly are doing things to continue to really be, dominate that market, really be an expert at this space. And really, you just got a hunger about you, this thing, like you said, entrepreneurial spirit around you that's just magnetic. And you're just doing some amazing things. So real proud of you. So as an expert in this space, Raphael, give us kind of a high level overview of kind of where the economy is today. What is your perspective of where things are and where you may see where things are heading in the future?
yeah, it's a great point. I mean, we could start on the real estate side to begin with, and then we can kind of work our way out to the broader economy as a whole. I mean, pretty evident to a lot of people that the significant rise in interest rates over the last year has really stagnated the transactional market. So transactions are down over 50% across the board, both on residential and in particular in commercial real estate. So you're seeing a lot less trading of assets within the last 12 months, and it's just a function of the environment. I mean, if you're paying a 7% interest rate for a property, you just can't pay as much as you could when interest rates were 3%, because the way you value commercial property is based on the income it produces. And so right now, with higher interest rates, that means that more of that money's that is generated by the building has to go towards paying the debt on the property. Thus, ultimately, the valuation of that property stagnates as well. And right now, sellers and buyers are kind of not necessarily an impasse, but there's such a big spread between what buyers are willing to pay and what sellers are willing to accept at this current time. It's definitely improving, and I think over the next year or so, you're going to start seeing more transactional volume in the real estate market as a whole. Just because I think the sellers that need to sell will need to sell, and then ultimately, I think there's going to be also sellers out there that realize they can't get top dollar like they did back in 21, but maybe it's better for me to reallocate the capital within this building than now buy another building and put it to work at a higher return. So I'm hopeful that that's what's going to happen. I think it will happen. Now, as far as the broader economy is concerned, I mean, people have been talking about recession for a while, but people are still spending in the economy quite significantly. I
Yeah.
mean, there hasn't been a significant drop off in transactions in a variety of different sectors, in particular on the retail side. I operate pretty heavily in the retail sector, and that still is operating at a very high level. I have a lot of clients that I'm working with that are looking to expand, both on the tenant side, whether that's quick service restaurants, even different retail chains are still looking to expand because the demand in the economy is still very high. So, on that front, I think that the economy is still doing very well considering the doom and gloom news out there. I think that we are not. We've had a dip off in transactions, but I still think that we're not nearly as bad as what most people are making it out to be.
Yeah. Yeah, I definitely agree. I coach people all over the world in different types of businesses. And so whether you're in manufacturing, real estate, legal, IT, whatever industry you may be in, I'm not seeing some of the stuff that you've seen on the news, right? Everybody's buying something, everybody's selling something. I mean, people are making money. Like the businesses I'm coaching are growing. They're evolving, and people are needing them, calling them, wanting more of what they need, and how to sell that, how to navigate that. Now the trick is how to navigate that market, how to take
Mhm.
more of that market share, how to reinvest that money, how to go find talent and employ that talent the right way, how to improve your products and services. There's all kind of challenges there, but overall, when you go, when I was out to eat this weekend, like every weekend I go out to eat with my family, and the restaurants are full. you
Yeah.
know I traveled down to, I was down to Key West a few months ago. I've been down to Tennessee recently. Like everywhere I go, restaurants are full. The tourism stuff is happening. People are moving and shaking and doing things. And so I think we're not even close to being in a recession at all. I have things slow down, have things, kind of, not as high speed as what they were prior to, some of the economic, conditions that were imposed with coronavirus and all that kind of stuff. Yeah, absolutely. Things are slower, but they're still moving. They're just moving in different ways than they used to. So,
Yeah. And it's just a ton of pent up demand still. I mean, it's unbelievable. And I,
yeah,
I think, when you shut down like we had, I mean, we're still kind of in an experiment. I mean, obviously, when it first happened, you shut down an economy for however long we did. I mean, that in of itself has never happened in the history of humankind. And so,
yep,
obviously, that was a big experiment on its own. But now, as we start to push out of this period of complete shutdown, I mean, we're still kind of in an experimental period. I mean, there's still a lot of people out there that have a lot of money to spend. I mean, that's just a natural byproduct of injecting trillions of dollars in the economy. At some point, that money is going to go back into the economy and move around. And as of right now, it's still doing so. And that's why
yeah,
inflation had been as high as it has been over the last year. But even to that point, I think inflation has dropped off significantly. And I think the Fed,
yep,
even their desire to continue to raise their Fed's funds rate, it seems kind of counterintuitive to me at this point, because I feel like
yep,
we're already seeing significant drop off in inflation. So I think the only
yep,
by continuing to put the foot on the gas pedal still, it's not going to be a smart idea for us
yep.
going forward. But
Yeah, I agree. The federal government's always behind in some form or
Mhm.
fashion. They're never ahead of things. They're never out front leading. They're always reacting to the real world and the real time effects of how things are actually happening. And so, yeah, you're right. I mean, you go to the grocery store, the price of milk's down, the price of some groceries are down, and gas prices are under control again. They're pretty steady, so far. So there's just a lot of things I think, uh, that I'm certainly seeing across the globe, actually, that things, people are ready to move forward. They're tired of stagnation. They're tired of sitting around and waiting and politics and all this other stuff. They're people are ready to execute. And I think they're just getting impatient and they're ready to go. And they're tired of the political scene and the finger pointing and the blaming and the he said and the she said. And it's just time to move forward and get some things done. And so, I wanted to, we're talking about the pandemic and stuff for a minute there. How has that affected the commercial real estate sector, and where is it now that we're a few years past the pandemic?
Yeah, that's a great point, and I appreciate you asking that question, because I feel like a lot of news headlines pertaining to commercial real estate spell that it's doomsday and everything else. Where I think it's important to understand that commercial real estate is a multivariate asset.
Yeah.
So there are offices, there are retail, and there's different types of retail. There's power centers that are these massive 500,000 square foot centers that have all the big box retailers. And there's also, neighborhood centers and quick service restaurant, standalone buildings. So, within all these different sectors, there's even further, bifurcation of a lot of these different products. And so, as a general, let's say, conversation, offices definitely struggled, in particular urban core. So if you look across the country, you'll see these massive office buildings and downtown core markets that are 50% occupied. And I think that's where the next economic bust, I think, is going to occur. When you talk about commercial real estate
Okay.
as a property type, I think the big bust is going to come with a lot of these office users or office owners who are just going to start giving back the buildings to the bank because it's just not going to make sense for them to continue to pay the debt. In particular, because in commercial real estate, the way that you finance commercial real estate is typically on a limited term. So, usually when you buy a commercial or residential property, you have a 30-year fixed rate mortgage where your
Yep.
mortgage rate stays the same as soon as you buy the property. But in commercial real estate, what often happens is you buy a property and the amortization or how long the loan spread over is maybe 20 years. But in the term or how long it actually stays fixed is 5 years. So after that 5-year term or 7-year term or 10-year term, whatever you agree to, then that note either comes due or the rate begins to float. So if it floats, it's going to jump up to the new higher rate. And so what's ultimately happening right
Mm.
now, and people are concerned about, is that over the next, I think, 5 years, almost $500 billion in commercial debt is going to come due. So a good portion of that, in particular, debt that's focused on the asset or the office property type, in particular in downtown core markets, I think they're rightfully so. People should be concerned about the fact that they're going to probably struggle. Now, industrial is still doing very well, but that was unhealthy growth anyways. I don't think it was sustainable to begin with. Retail is at the best it's been ever, I
Right.
think. I mean, I remember reading about the vacancy rate from a retail standpoint. It was the best it's been since like
Mm.
2005 or 2006, where, obviously we're in a very big economic boom when it came to real
Wow.
estate. So retail's doing very well. Um, development is slow for a variety of different reasons. I think construction costs are obviously a big one. And then now that interest rates have spiked, the cost of debt's very expensive and developers take on a heavy burden when it comes to debt. So they've slowed down in the development side, which has caused multifamily to continue to be strong because new product is not coming to market. And so rents are still remaining pretty high, even though, you would think that with interest rates rising, you'd ultimately have, concerns in that property type. Because another thing with multifamily too, it's one of those property types that was so popular over the last couple of years that people have been bidding up the value of these properties. And so I think there will be some distress in multifamily across the nation. Now, it won't be as pronounced as office, but I would definitely look out in multifamily, in particular in the Sunbelt states like Florida and Texas and some of these other markets. I think you're going to start seeing some distress in those products, for certain developers and certain syndicators.
Yeah. Yeah. It seems like everybody is, wanting everybody to invest in these multifamily units, right? These apartment complexes, condo units, all those kind of things. And that was, syndication has become really big too. Like, oh, you can just put, they made it easy for a lot of people to do it, not just people with a lot of money and, corporate funds to kind of diversify their portfolios. Now they got it to the point where you can take, a smaller chunk of a few $1,000 and start plugging that into a syndicated property management situation where you can, quote unquote, get home some mailbox money and kind of, almost double your money over a certain period of time. Theoretically, yes, but when the market shifts like
Yep,
that,
I mean, you're right,
what
and I think
happens?
that's what the concern is. Oh, yeah, I think the big
Those
concern
things
is
don't
that,
happen.
that there has been a lot of speculation in that market over a long period of time because you're right, there's been probably out of all the property types, you've had the most entrance in that market over the last, let's say, decade. And in particular, when it's come to, the
Yep.
availability of information for a lot of these syndicators. So there's been a lot of people out there that maybe aren't the most sophisticated when it comes to investment understanding, but they know how to raise money. So they go out there and raise money and they talk up this particular property type as being a great investment, which, a lot multifamily is a great investment opportunity if you know what you're doing. But what's been happening over the last, let's say, 5 to 7 years is that there's been such a run up in pricing that if you bought in 21 or 22 when interest rates were low, you probably paid a premium. And over the next several years, I envision that interest rates are probably going to hover in that 5 to 7% range, most likely around the 6 to 7% range over the, let's say, next 5 years. So your note's going to come due at some
Yeah.
point, and in which case, you're going to have to reallocate capital, whether that's you sell the property at a loss or maybe you have to raise more money from your
Yep.
investors. So I really think that's going to be an area where over the next couple of years, you're going to see a lot of distress. Now, there's a lot of sophisticated investors out there that are going to do just fine. And I think multifamily long term is still a very good property type to invest in. But I mean, it's gonna clear out a lot of speculators. And wasn't it Warren Buffett who said that you don't know who's swimming without their trunks on until the water goes out, right?
That's absolutely true, man. Absolutely true. And so, yeah, I mean, everybody everybody's always chasing something, right? I mean, yeah, there's a lot of multifamily opportunities out there, but in real estate, what's the number one thing, right? Location, right? So if it's, in a downtown district where nobody's working and things are slow and sluggish. I mean, I take a look at like Louisville, Kentucky, used to be, a number of years ago, back, 2018, 19, 20 range. You walk downtown, it was happening. There was music, there was the energy, there were a lot of people walking up down the streets. And you walk down there in the past couple of years, and it's pretty dead. Crime has increased. There's more boards on the windows than that we've ever seen. Right? There's a lot of dynamics changing. So if you invested in some, real estate properties around those types of areas where there's stagnation, where there's challenges like that, yeah, man, you potentially, depending on the parameters of you getting in on a deal, yeah, you're going to probably face some challenges, right? But there's also new developed areas where you get around colleges, you get around universities, you get around places where there's a lot of new development, new restaurants, new movie theaters and shopping centers and things like that. A lot of opportunities there, right? So you just have to kind of pick and choose and be smart, and be knowledgeable that whoever you're connecting with and these syndicators, everybody's a syndicator, but there's only a half a dozen of them I've ever met that were actually really, really knew their stuff, really were upstanding, good people that that got continual success year over year in all of the different things that they're doing. So you just got to be careful there. So let's talk about the broader economy, shift gears a little bit. What do you see are the top maybe 3, 4 challenges out there that people are facing, especially like in the business sector and moving their businesses forward, and how that pertains to real estate?
Yeah, I think it's a continual balance of prices, right? So wages obviously have increased significantly over the last several years. So as a business owner, I've talked to a lot of business owners that's a big issue. They're trying to manage the growth as far as their wages are concerned, but they also want to attract top talent. And right now, I'm sure you talk to your business owner clients all the time. It's very hard to find talent, and when you find talent, you're gonna have to pay top dollar for it. And so it's one of those things where you're always trying to have to manage, your workforce, and workforce is kind of the number one, 2 and 3 issue for a lot of business owners out there.
Yeah.
So, I don't see demand dropping off significantly, as we kind of alluded to earlier. There's still a lot of money in the economy. People are spending money in the economy. There hasn't been a sizable decrease in retail spending across the board. And obviously that leads itself well to the industrial sector, where you have a lot of people, a lot of businesses that service you know, third party logistics companies. You've got a lot of different other ancillary, businesses that support the retail industry that obviously are doing well as a result of retail activity still continuing to operate at a high level.
Yeah.
But I would say, as far as the issues going forward, I see wages and I see, recruitment of top talent being an issue. And, I think how does that play out over the next couple of years? I mean,
Is having facilities versus not having facilities and everybody being remote part of the future? how are you seeing the future? Are we seeing a balance between hybrid of, people working from home all the time versus part-time versus how are you seeing that play out in the next few years?
I think it will eventually just be a hybrid model. Now, how hybrid it is going to depend on the company and the leadership of that company. So some companies are you show up 5 days a week. I mean, that's just part of the culture of that enterprise.
Yep.
Now, I would say a lot more of companies are considering a couple day a week option when it comes to off being in the office, and I think that's beneficial. I mean, anytime that you operate in a team environment, you kind of want to be face to face. I mean, obviously I can get stuff done and interact with someone on a Zoom call, but after a while it's kind of nice to sit down and work through things on a more personal level, and it helps build that culture that's so important when you talk about building an enterprise. I feel like culture is really created through personal interaction, and you can't replicate that via
Yeah.
computer screen. So, I do envision them the having a hybrid approach, but maybe having 3 days a week or 4 days a week in the office, and then a couple days at home is viable. And obviously that depends on the business, because there are certain businesses where that's not an option. I mean, you cannot
Yep.
have people that are creating that are in a manufacturing company. You can't produce something at home, right? as someone who's on the supply line, so you're
That's
physically
right.
going to have to be there. I know in my previous role as a software consultant, I mean, yes, on the software side I could definitely develop at home, but we were a client facing business, so we had to show our face in front of our clients on a regular basis to showcase, to create that rapport. And so even during COVID, I had friends that were still at that previous company, and they were required to, once the mandates were lifted, they were required to be in the office 5 days a week. So, again, I think it just depends on the enterprise, but I think, more commonly what you're going to see is more of a hybrid approach, which, will probably lead itself to
Yeah.
not necessarily requiring as much office space. So,
Yeah, it's interesting. I here's kind of some things that I see. One, at the end of the day, business is not about products and services. Business is about people. It's about people creating relationships with other people. Because it's people that work late to get the job done when the job needs to get done. It's people that take other people out to lunch and understand what's going on in that relationship and dynamic of a client and a supplier of goods and services, right? It's people staying late and going that extra mile. It's people that really make it happen, right? So if you really if you really think about it, to me, the future is about people and customer experiences, that experience you're giving your clients in whatever that may be. You can be in healthcare, you can be in IT, you can be in, selling vehicles and, software, whatever that may be. And it's not necessarily about the end state of the products or services you're buying, because you can probably get that from many people, but people buy the relationships, they buy the experience that company gives them. There's plenty of fast food restaurants out there. You can drive up, get your stuff, and drive off, eat on the go, and get where you need to be good, and you're full and you're satisfied for the time being, right? But people will wait in line at Chick-fil-A because of the experience Chick-fil-A gives them that's different than
mhm,
McDonald's.
100%.
Nothing wrong with McDonald's, it's just a different
Yep, and that's
experience,
culture, right? That the
right?
culture at Chick-fil-A is a very unique culture, and it's permeates from the top
You
all the way
got it.
down. And so in order for you to facilitate and create culture, you have to have close contact with a lot of different people, and you have to be very
That's
selective with
right.
who you let into that environment. If they don't fit, then you obviously have to remove them from that environment, and they've done a phenomenal job over decades to facilitate and create that culture. Now, I would wager to say that if and maybe Chick-fil-A is a bad example because they're actually providing a physical product, but let's say they're providing a service. If you had everyone at home and you take the same people and put them at home, I guarantee you that over time, that culture would disintegrate because you don't have that face to
Yeah,
face and
absolutely.
personalized contact on a regular
Well,
basis.
think about it on a very basic level, Raphael. We're talking about relationships. Now, don't want to get into your personal life, but when you met your wife, did you guys go out on dates on Zoom calls?
No,
No. Might have talked on the phone a few times, a couple times a week, checking in on things, but you probably made arrangements to meet in person. Well, why can't you just do it on a Zoom call? Why can't you just do it on an app? Why can't you do it in a social media thing, right? Where you just court each other and talk and chat and FaceTime and all that kind of stuff. And you do that over 6, 7, 8 months or a year, and then you're ready to get married, right?
Yeah. I mean, 100%.
No,
Well, no, I'm sorry. I thought you meant I thought you
no,
meant in person. You're right. No, you don't replicate that. I mean, it's and it kind of goes to show even when you see a lot of people who are on long distance relationships, and not to say long distance relationships can't work, but the propensity for them to not work is higher. So it's one of those things
that's
where,
right.
even in that scenario where you're removed from someone for a period of time, even if you did have, relationship with them in person for many years, and all of a sudden you go and do a long distance relationship, it's still not the same. I mean, it makes it a lot
That's
harder
right.
to really manage that.
Yeah, you can't hold hands and walk down the beach on Zoom, right? You can't, give somebody a goodnight kiss on Zoom, right? And so when you think about that from working together in an office setting, whether it's people that all work, employees that work for the same employer, you talk about the employees working with the clients, working with their suppliers, vendors, all of those dynamics is all relationship based. And there's a certain point where you just cannot beat that personal engagement, looking eyeball to eyeball. There's just something about looking across the table, whether it's the lunch table or the desk conference room table or whatever that may be, and looking eyeball to eyeball and having just a genuine conversation with it. Just the dynamics of being in person is just completely different. So I kind of see the future as is kind of a mixture of like a hybrid, right? Where people that need to focus certain times of the week on very specific things and need to concentrate, can work from home from time to time, right? But I also see where people need conference room space, a room to bring people together in a professional setting where everybody can dress professional, show up, conduct their business, sign a deal, whatever that may be. So whether you're hoteling and just kind of sharing space or you actually have physical space, I think the element of commercial space is still relevant. And I think it's just how we use it is just going to be different than the traditional, 9 to 5. Everybody goes to work in a building. You go up the elevator, you get off, you go to your cubicle, and you sit there from 9 to 5, do your thing, get up, go home. I think the dynamics of that are certainly going to be changing to where the use of that space, back in the military. I got friends that were in the Navy, and in the Navy, they hot bunk, man. Somebody's sleeping in the bunk, somebody's working, somebody gets off work, somebody's going to work, and everybody kind of shares that space. They don't build, massive dormitories on top of a ship. No, you maximize the space you have. And I see that as part of the future. Do you agree or disagree?
Yeah, I still think, like you said, there's going to be a demand for office, and that's where I think that there's been
Yeah.
some, oversimplification of the broader whole as far as office is concerned. So, you're right. I think urban core office is going to struggle, unless it's like Class A, top of the line product, because that's always going to be sought after by a lot of prestigious firms and other users.
Yeah. Like law
Yeah,
firms and,
yeah,
CPA
investment
firms. Yeah,
banks,
exactly.
people who companies that want to create that you know luxury experience for their clientele, they're always going to be seeking that type of office space. So I think that those types of uses, the new product, the really nice stuff, is going to probably still do well, especially if it's well located. Now, older product that's an urban core is going to struggle. But suburban office, like you said, I mean, one of the things that had been kind of a hot point right out of COVID was this idea of the hub and spoke approach, where you have a hub, which is a main office space downtown that you kind of congregate in periodically, maybe like once a month or once a quarter, and then you have more of these satellite offices. So imagine the main office being
Mm.
that hub, and then spokes are all these mini offices kind of the other suburban. areas that are closer to employees' homes. And so maybe your footprint downtown may shrink, but now you have these little smaller offices in these different suburban markets, which can be very attractive for people because one of the biggest complaints that people have about going into the office is the commute times. And in particular in larger markets, you're talking, Atlanta, if you live outside of the major hub or the major part of the city, you're probably talking an hour in traffic either way. So,
Oh, at
that's your
least.
whole
Yeah,
that's
yeah.
2 hours of your life every day that you have to worry about traffic. And so, if you can minimize that time that they're in their car, it's going to make it a lot more attractive for people to potentially want to work for the company. And so, I think that there's
Yeah.
merit to both approaches.
Yeah, I certainly agree because when you're talking about talent attraction, I think facilities and in that reputation, that brand, people want to be affiliated with success and feeling like whatever they're connecting to at this company that they're interested in or that wants to hire them, is this a good fit for me? Is this, the kind of company I want to work for, the kind of people, leadership, culture, all those kind of things. And so when you go in and you look at the office space and it's very structured and you like kind of feel like you're just like a needle in a haystack. You're just kind of buried in there somewhere, and you get lost in the shuffle of things. And people don't like that. People want kind of some freedom. They want autonomy. They want to be able to collaborate and work together. And so that image of the facility matters. People want a fun place to go that's bright and it's got energy. They don't want to go to a dark, dungeony kind of a place, right? So when you think about your facilities, I would encourage people to think about, what does it feel like to walk in? Does it feel like, oh my God, this is like it's like Disney World, man. I mean, this is awesome. Not that you need to create a Disney World experience for everybody, but what is that experience you're giving your employees? Do they feel like they can get up and walk around? There's their collaboration rooms and Zoom rooms and private room space. Like, to me, it needs to be very dynamic because everybody's different and you want all these different diverse types of people working for you because diversity brings strength, right? And everybody works in different ways. And so I kind of see office space being broken up into different kinds of spaces used different ways for different people to be as productive as possible. Do you agree?
Yeah, yeah,
Disagree? How do
I
you
think
feel
that's a
about
great
that?
point. And I think what you said was very important was the idea that the office space is more of an investment because, if you create an
Yeah.
environment that's
Well
that's
said.
very attractive to people. Through the podcast, I've had a chance to interview brokers all across the country. I've interviewed people in New York and California and everywhere in between. And, the constant, idea that's been shared is that these larger companies they invest into trying to get the top office spaces because like you said young talented people want to work in an environment that's like hot and hip and everything. And so what ends up happening is there's a gentleman in New York City. He's a big broker out there for office product, and he had this big law firm that he was representing to lease a large office space in one of these really brand new nice office towers in New York City. And initially, they were kind of hesitant about pulling the trigger because it was a sizable expense. But luckily, he was able to get them to commit to it. And what ended up happening is they were able to recruit more people that they wanted, and they were able to actually pay them less than they would have otherwise because they had an inundation of people who wanted to work in that environment. And so, just looking at
Yep.
that analysis, you say, okay, well, even though I spent maybe a little bit more than maybe I wanted to, in reality, when it came to the office space, because I created an environment that people wanted to work in, now I have my pick of the talent. Because at the end of the day, talent is going to be able to bring you 5x, 6x the revenue that you pay them in theory. If it's
At
if
least.
it's
Yeah,
a if
yeah.
it's a top employee, they're going to pay themselves over tenfold. And so that should be your primary objective is to try to find ways to recruit the best talent. And one of an excellent way to do that is to create an environment that they want to work in.
Yeah. Yeah, they need to feel proud.
Mhm.
Like, hey, I work here. I work for this company. Google never has an issue finding people, it seems, right? Because they built a culture. It's fun. You can, if you want to, take a ride on the bike around the campus, there's a bicycle waiting on you outside. If you want to take a nap on your lunch break, they've got little sleeping pods where you can just kind of curl up and take a nap and rejuvenate yourself. I mean, there's just different ways they use to connect to people. There was this GIS company. GIS is a geospatial company, mapping company that I had worked with, not for, but I worked with them. They're a partner unit in a previous venture, and so I was out there looking at their campus. Their campus was amazing. I mean, they had trees and koi fish ponds, and they just blended nature in there, some trails, some places to sit outside, and just all the different elements that people like. They can go inside if it's bad weather, they can work outside. Everything was lit up, wi-fi everywhere, and it was just that there were places where it was kind of tranquil and peaceful and you can just kind of focus and be quiet. There were places where you can get together and huddle and brainstorm and just kind of geek out on stuff and figure out hard problems and whiteboard them out. There were places where you can do one-on-one meetings with people, and it was just, people loved it there. And they paid basic rates for their people. People loved working there because of how it made them feel. It was relaxed. It was fun. There was different things to stimulate them, things they can connect to, and it just had a certain culture and vibe to it that people enjoyed, and it gave them happiness and peace and things that mattered more than getting top dollar or getting some perk or benefit. They cost the company tons of money, so there's lots of ways to use your properties without spending a massive amount of money to make it a really good experience for your employees, to make them feel like you care about them, and value how they need to work to be the best productive person for you.
Absolutely, I couldn't agree more. I think that if people took that approach when it came to the way that they presented their office environment, I think they would benefit tenfold by that, approach.
Yeah. All right. Um, so as we kind of round out this conversation, I want to get your take on one thing. So, what are the kinds of things that business leaders need to be thinking about now, thinking about differently as we go forward? If when we think about the future of commercial property and real estate, whether it's an investment, whether it's to expand your business and put more people in that space, take over market share, however you're thinking about commercial real estate, what are some of the top things that people need to be thinking about and thinking differently about as we go forward?
That's a great point. That's a great question. So, obviously, the space has to conform to what your ultimate goals are as a business. Not every business is going to be a explosive growth enterprise where you're going to, you're going to hire 200 people in your first month, right? I mean, it's just a different type of business model. So, in environments where you're going to be projecting explosive growth, maybe having a little bit more flexibility when it comes to your space is more valuable. So, leasing becomes a much more attractive option, even if you have to pay premium for it. It's much better for you to have that flexibility when it comes to your space and the ability to then go out and maybe find a bigger space in the next couple of years if for some reason you just can't fit in your space anymore. Now on the buy side, that I see more on the more stable enterprise. So maybe you're projecting a few percentage point for percentage a year in when it comes to your workforce, so you have much more steady and productive growth over a period of time. Maybe you envision yourself staying in a space for 10 plus years, in which case buying a building could be very beneficial, in particular if you can buy a property that has additional land on it to then eventually construct another structure if, let's say, that you get to a point where you need to have more space. Obviously, that can create, there's two benefits to that. One is that obviously you get to build equity within a property, and that in and of itself is an asset that you can carry forward and you maybe leverage going forward to expand your business or buy more property or whatever else. But it also gives you that flexibility with the additional land to then maybe, build another structure on it, or maybe sell it off and then now leverage that into paying down your debt and then, getting some of the debt off your balance sheet. So, I would say from that perspective, it's just important to really sit down and understand what your real estate needs are going to be going forward and understand what type of business you are, because not every business is the same. And, you as a business owner are going to know way more than any other real estate professional will. Like if I have to tell you about your business, then there's a problem, right? So I think that's kind of where what it comes down to.
That's right. What are maybe some of the top two or three mistakes that business leaders make when they're thinking about their commercial properties and their facilities?
They don't think about it soon enough, and then they get into a position where they're time constrained into trying to make a decision, and then they make a bad decision. So I can't tell you how many times I've had business owners reach out to me and they say, "Oh yeah, like my lease is up in 2 months, and I'm trying to see, my landlord doesn't want to renew or whatever, right? Whatever the situation is." But the time constraint
Hmm.
is 2 to 3 months, where it takes a while to get going. I mean, it's the process of identifying and securing a property takes many months to complete, oftentimes. So if you yourself are not being cognizant or proactive about the process, then you put yourself in a really bad position. And I've seen it where you're working with someone and their lease expires and the landlord doesn't want to renew their lease, and now you don't have a place to call home, and you don't have a new place either because you
Right.
haven't found it. And so now that could really put a damper on your business. And so that's why it's so important, in my opinion, to kind of always have your future needs as far as space is concerned in the back of your mind, because you never want to put yourself in a bad position to need additional space, and then you don't have it.
Yeah. Okay, man, that's great advice. Well, as we kind of wrap up today, man, I feel like we just kind of scratched the surface. I feel like we just kind of got the conversation going, and we're already kind of coming to the end of today's show. So we'll probably definitely have you back on the show, maybe go deeper into some of these things, because I think we've certainly percolated people's minds thinking about some things maybe in different ways going forward. So as we kind of wrap up the show today, Raphael, what are maybe the top three things you want people to remember the most out of today's conversation? Things that can help them, be able to take immediate action and do things to improve their situation when it comes to their commercial real estate.
Yeah, that's a great question. I would say number one, it's not as bad as everyone makes it seem it is. So I think that's just kind of a recurring theme throughout this podcast, is that we're still have a very healthy economy, and the only benefit you're going to get, and really it's not a benefit, it's actually a detriment. If you view the economy as being terrible and not productive, you're not going to take action, and you're just going to sit and wait,
Yep.
as most people are saying, like, we'll get through this eventually, and you're going to let your competitors get ahead of you. So I think in this time of just kind of weirdness, when we're in a period of flux, know that the economy is still strong, and this is the time to double down and get after it, and continue to capture market share. So I'd say that's number one. Number two, I think, is kind of pertinent to what we talked about, understanding that commercial real estate is a multifaceted property, or asset, I should say. So it's not just office is its own sector. You have retail and all these different subsects of retail. You have industrial and all these different subsects of industrial. So there's a lot of value in commercial real estate. Now, there are different sectors that are going to go through some flux over the next several years, particularly office core buildings. So those are going to be opportunities maybe for those individuals who want to buy those properties at a steep discount. I think there's going to be opportunities in the coming years. And then finally, we kind of touched on it before, but always kind of have, as a business owner, you always have to have an idea of what your space needs are going to be going forward. And don't put it on the back burner and wait till the last second, because I guarantee you, I've seen it happen time and time again. People put themselves in bad positions, and then they have to kind of find something that maybe isn't necessarily what they need, but they need the space. So they just kind of pull the trigger and sign up for a 5-year commitment or 3-year commitment. Or sometimes I've even seen it in one occasion where they lost the space and they had to kind of fumble through and not have an actual physical space for their business, and that really hurt them. So
Wow. Great advice, man. Great advice. So be proactive, have a game plan, be thinking ahead, be talking to experts like Raphael out there in this space well in advance, at least a year in advance of potential moves or expansions or growth. So if you're a business owner or business leader out there and your business is projected to grow, add more people to the books, expand to different markets, different towns, different cities, and you need space and facilities, you need to be connecting with folks like Raphael and experts in this industry to navigate those conversations, right? It only helps inform you. And I think that's a big takeaway for me is this is such a complex space that most people don't really understand, that they need to understand. They need to make really good, strong, informed decisions. You can make one bad decision in this space, whether you're leasing, buying, selling, or whatever, and it'd be catastrophic. It can potentially, take you out of business if you're not careful. And you can also use it as a way to continue to attract the best of the best. People don't wake up every day and say, "Hey, I want to go work for the biggest loser company in America. I want to go work for the most chaotic, crazy, upside down company in my town," right? No, they wake up and say, "Man, I want to work for a leader. I want to work for a company that's doing important things, that is fun to go work at, where I feel like I can make a difference. I feel like they value me and what I bring to the table. They care about me enough to allow me to present my best in the way that I present that, to further this company to the best of its ability." And I think that's really, really important. So Raphael, thank you so much for being on the show, man. You're just always fun to spend time with. How do people learn more? How do people contact you?
Yeah, well, first off, it's an honor to be on the show, Jason. I'm glad we were able to make this happen. I'm really looking forward to continuing the dialogue and maybe down the line have another episode to talk about, more refined topics pertaining to commercial real estate in the broader economy. But if people were interested in reaching out, I'm super easy to get a hold of. You can reach out to me via my cell. I have it online. Just type in my name, Raphael Collazo, Collazo. You can give me a call. You can add me on LinkedIn. You can send me an email. I'm usually pretty responsive, usually a 24 to 48 hour turnaround time. But emails, I'm always a lot quicker. Texting, not so great. But if you just give me a call, I'm going to be a lot more responsive.
All right. Is there a website? Is there a place they can go to learn more? You can download your
Oh,
books
sure.
and
Yeah.
buy your books and all that
Yeah,
kind of
so you
stuff?
can go to my website at www.raphaelcollazo.com, and that's RAPHAELCOLLAZO.com. If you want to buy my books, I've written 6 of them. My 7th book's coming out here shortly. It's going to be a book called "Before You Sell That Building." Kind of see the recurring theme here of commercial real estate. So that'll be coming out on Amazon. So go ahead and check that out. And yeah, I'm looking forward to keeping in touch.
Wow, I'm behind. I thought you had a few books out. I didn't know you had 7.
Yeah.
So that's amazing. Congratulations on that. And but I tell you, I mean, he literally wrote the book on these topics we're talking about today. Amazing young guy doing some just incredible things out there. So thank you for being on the show today. Folks, you don't want to miss next week. Next week, we've got another great show to kind of follow on to this theme of this show, and that's how to build a strong, stable company with consistent growth, even during turbulent times. You don't want to miss that. Thanks for being on the show. We'll look forward to seeing you next week. Have a good one.